She's former Fed governor and former deputy Treasury secretary, and she's also a visiting professor at Duke University School of Law and a CNBC contributor. So Sarah, we spoke with this yesterday. Steve was kind of all over this, telling us what he thought was going to be happening and where things look like they'll be headed next. And really, it doesn't seem that extreme. Maybe it's not a surprise or anything that people weren't already anticipating.
Yeah, I think that's right, Becky. You've got to keep in mind that Chairman Powell has made it abundantly clear that there is going to be a lot of signaling before the taper begins. And I think what we're seeing in these recent speeches and these recent movements is just that. It is the beginning of a very well choreographed and intentional set of moves, set of signals that will eventually culminate with Chairman Powell himself indicating the announcement of a taper. Now, that is, he has not done that yet. And he hasn't even said he is going to do that yet or when it's happening. But what I think we are seeing and what I think markets should understand is that this is part of that slow rollout.
Does the next jobs report matter? And the last two have been incredibly strong. Maybe we're anticipating that we'll get strong numbers once again. But it's not just that. It's also the inflation data that we've seen that's been kind of baked into this. We know that things are probably not going to shut down as they did with the earlier COVID variants. So if you're looking at all of those issues, if we get a weaker read with the next jobs report, would that be enough to put this whole plan on hold?
Well, more data is always better, particularly in this period of time where we are really, from an economic perspective, in unprecedented and uncharted territory. So waiting for data is always the prudent thing to do. And my instinct is that the Fed is going to want to wait for data, and they're going to look at it and very carefully, as they always do. And why they would make a move prior to September data is probably, I think of low probability. So more data is better, and data of all kinds: the unemployment side, the whole labor market, all of the contours of the labor market, and of course, what is happening on the inflation side.
Hey, Steve, just in terms of the timing of this, you have to think it's because of Jackson Hole coming up, and that may not be an announcement that comes before that, but it's going to be hard for Chairman Powell to get away without talking about these issues, and maybe this is the best way to sort of ease into whatever his comments are going to be.
I mean, at some point you have to think that the idea that there's always going to be some big event in Jackson Hole has gone beyond coincidence. But at this point, I don't think Jackson Hole forces the Fed's hand. I think what's happened, Becky, is the data's changed. You got jobs data that was better than expected, almost 2 million jobs over 2 months. The inflation data coming in hotter than expected, especially that producer price index, and the Fed saying, look, where's the risk? The risk is that inflation will be higher than we expect, and that's what they've moved. They're moving to address that.